Welcome back to Explain the Charts. Today, March 4th, 2025, we're diving deep into XAUUSD, analyzing both the current news and the charts to give you a comprehensive overview. Recent news highlights the impact of Trump's tariffs on Canada and Mexico, sparking fears of a recession and driving investors towards gold as a safe haven. We'll also discuss the January PCE index data, which suggests inflation continues to run hot, and the implications for gold prices. Let's jump into the charts and see how these events are reflected in the price action. Looking at the one-day chart, we can see a significant uptrend in XAUUSD over the past few months, culminating in recent highs. However, there has been some pullbacks. But this is normal price action. We'll need to monitor for more weakness over the coming days. Let's narrow in on the last few weeks to see what's been happening more recently. Focusing on the recent price action, we observe some volatility and indecision. The daily candles show a mix of bullish and bearish signals, indicating a potential tug-of-war between buyers and sellers. Based on the tariffs news, we might see increased volatility and continued upside pressure as investors flock to gold. Key resistance is around 2,900, a major psychological level. A sustained break above this could lead to further gains. On the downside, we're looking at support around 2,860. A break below this level could signal a potential correction. Let's switch to the one-hour chart for a more granular view of the recent price action. The one-hour chart provides a closer look at the intraday movements. We can see more defined support and resistance levels. There's some resistance to be seen around 2890 to 2895, while we found support around 2880. The uptrend has been established for several weeks, so this consolidation will be important to watch. Let's narrow in on the last day or so to see what's been happening. Zooming in, we see that gold has tested the 2890 to 2895 resistance several times on the one-hour chart today, ultimately breaking down. It will be important to watch to see if this can recover back over 2890. If it cannot, a breakdown to test 2,880 might be possible. We must watch to see how those price actions occur to make sure we see true confirmation or a bull trap. In the short term, a bullish scenario would involve a break above $2,895, potentially targeting $2,900 and beyond, driven by tariff-related safe haven demand. I think there's 60% chance this happens if we have more news confirming a recession. A bearish scenario would see a break below $2,860, leading to a test of lower support levels around $2,830 to $2,840. I'd say 40% chance of that happening, perhaps if there's signs inflation is coming under control. Long-term, if Trump's policies continue to fuel inflation and weigh on the global economy, gold could see further upward pressure. Geopolitical instability could also contribute to gold's appeal as a safe store of value. So, to recap, key price levels to watch are $2,860 as support and $2,900 as resistance. Keep an eye on economic data releases and geopolitical developments, as these will likely influence gold prices. Remember to always manage your risk and trade responsibly. Thanks for watching Explain the Charts, and we will see you next time.